Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Good morning, traders. Here is Jason with your daily market outlook. The US dollar index initially dipped but rebounded to trade above 98.5. The CPI report had limited impact on market expectations for the Fed's next move. Headline inflation came in slightly higher, both year on year and month on month, while core inflation was lower than expected, suggesting limited price pressure despite recent tariffs. Traders slightly raised expectations for a rate cut, with markets still pricing in 2 cuts by year end, the first possibly in September. WTI crude fell slightly on Tuesday to $65.65, following a nearly 3% drop on Monday. Traders weighed President Trump's new threat of sanctions on Russian oil buyers, raising concerns about global supply against ongoing tariff risks. Trump announced new weapons for Ukraine and warned that if Moscow doesn't agree to a peace deal within 50 days, sanctions will hit buyers of Russian oil. Markets saw this as a delay tactic, easing immediate supply concerns. Gold fell sharply on Tuesday, losing over 0.55% as the latest US inflation data lifted the dollar and weighed on precious metals. The CPI report showed rising headline and core inflation year on year, hinting that tariffs may be fueling price pressures. This kept the Fed cautious, with markets now expecting no rate cuts until more data emerges, possibly at Jackson Hole or September's meeting. USD JPY surged over 0.86% during the North American session, hitting 148.95 and nearing the 149 level for the first time since April 2025. A stronger than expected US CPI pushed Treasury yields higher, dimming hopes for near-term rate cuts. The BLS reported a 2.7% annual CPI increase for June, still above the Fed's 2% target. However, markets expect the Fed to hold rates steady in June. So the 10-year yield climbed to 4.483%, helping to boost the dollar against the yen. EUR USD fell more than 0.8% on Tuesday, dropping to a near 3-week low as US CPI inflation rose in June, reversing the disinflation trend and cooling bets on a Fed rate cut in September. The second quarter uptick in consumer prices reignited concerns about sticky inflation. Although most figures met or exceeded forecasts, investors felt the inflationary pinch. According to CME's FedWatch tool, markets now fully expect rates to remain unchanged in July.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.